Hello and welcome to NavTalk. NavTalk is proudly brought to you by the Navwealth Financial Group, helping you reach your destination in life on purpose. My name is Simon Prowse and I'll be your regular host for this series of podcasts. And I look forward to bringing you interviews and content on a broad range of topics. Topics that will be educational, inspirational, informative and at times fun. Hello there and welcome to NavTalk and our today's special tax planning edition. Today's topic is departing from our more normal agenda and talking with business owners and getting back to more of the grassroots accounting and taxation and looking into what can be done in order to prepare for the end of financial year, which is fast approaching, less than 2 months away. I would encourage any of you, whether you're a business owner or an individual, to take some time to consider the end of financial year and what you might be able to do to enhance your circumstances and your outcomes before the 30th of June. In conjunction with this talk is a discussion paper on the topic, along with 2 checklists, one specifically designed for individuals and the other one for businesses or business owners. I'm joined today by the Director of Navwealth Bookkeeping, Hayley Kalms. Hi there, Hayley.
Hi, Simon.
Thanks for joining us today, Hayley, for this very important talk with regard to planning the end of financial year. How do you feel about this financial year, Hayley?
Oh, look, I think this financial year, it's been really up and down, hasn't it? It's been a roller coaster. We've had COVID, we've had floods, we've had everything thrown at us. But I think we can see there's a little bit of business confidence out there starting to build. I think it's still a little bit tentative with the election and interest rate rises and all of that sort of hanging over our heads still at the moment. But I think going into the end of financial year, things are looking positive.
So there's a little bit of uncertainty, if you like.
Yes, definitely. I think still, but I think we're on the way up.
So this post-COVID, if you like, rather than floods recovery, what are you seeing out there? Are businesses starting to see real changes in turnover and the like?
I think so, yeah. A lot of my clients and their businesses, their turnover has definitely increased as confidence builds in the business world. There's a lot more buying out there. And
so all these people that have had big piles of money built up in their bank accounts during the COVID lockdown, they're out there spending. Is that what you're saying? Definitely,
yeah. Recently went on a holiday and holiday spots are jam-packed. So you can see people are out there willing to spend their money.
Great. So in your opinion, do you think this post-COVID spending bubble, might be, if we want to call it that, it might stick around?
I think it will, yeah, because I don't think people are still being, as I said before, a bit tentative, a bit careful. So I think there still will be a lot of buying and confidence still to come in the following months and going into the next financial year.
And because of the lack of people coming into the country, we're seeing a massive under shortage of employment resources. Is that what you're seeing out there?
Definitely. Yeah, it's really hard to get staff at the moment. And we're seeing that ourselves in our own office. It's really hard to employ staff. And I think that's one area that will need to be improved in the coming months.
Yeah, that's interesting because it seems to be the message I'm hearing with every single business is they're looking for staff resources and they're just not there.
Yeah, correct. Yep.
And given that, and given these times and interest rate rises and the lack of staff resources, it's really an employees market. Are you seeing any changes in that space?
I think employees have got more of the negotiation. It's more on their side, so they can really benefit from this, maybe even demand a little bit of a higher salary and sort of more conditions for themselves, definitely.
Which is like working from home, for example.
Working from home, yeah, definitely. I think that landscape has totally changed. I think most businesses will allow working from home or a combination of both.
Yeah, that's going to be an interesting space as it develops.
Yeah.
Mind you, I'm seeing a lot more traffic on the road in the last couple of weeks, so I think people have started to lose the energy for working at home and would like to be back in the office. Is you seeing that a little bit?
Yeah, I have. Yeah, I think there's no replacement for good, socialising and being around people in the office and that communication in the office. I think that'll come back more into play. But I think there'll still be, a certain amount of time that will be worthwhile spending at home, working from home as well. I think there's be a good balance. A
good balance is going to be the challenge for most businesses. Hayley, when it comes to your bookkeeping considerations and your team and you're working mainly with businesses, what are those fundamentals that you look for and try and action before the end of the financial year?
Yeah, so a bookkeeper's role is to have that information available for the accountants to do their tax planning at the end of financial year, which is very important to get the best out of the business and get them in the best position. So the first thing that we always look at is probably the payroll and payroll reconciliation and any future considerations we need to take into account, especially at the moment, the superannuation guarantee charge. So that is changing now for the next few years. So that's an important consideration we need to look at end of financial year with our clients.
So you mentioned super guarantee. What's happened in that space?
Well, it's going to increase to 10.5% on 1st of July 2022, and it is moving up to 12% by 2025.
Wow.
Yeah.
Wow. So that's a lot of money for an employer to be paying on behalf of their employee, which is effectively going on top of their wages. What does that mean? Does that mean an automatic wage increase?
Well, that's one thing we need to consider. We need to look at the employee agreements and see whether their salary is inclusive of super or exclusive of super to see whether it is an added cost to the business.
So inclusive of super, the rate of the super rise comes in and we're effectively dropping their salary.
Correct. Yeah, they'll get less in the hand, really, each pay run.
Mind you, as an employee market, we're not probably going to see those outcomes, are we?
No, I'd probably recommend not. I think if you want to get the best out of your employees, you would go the other way. Yeah.
So, but it's a time to, I assume, as an employer, if it's inclusive, you sit down with your employees and go through it and make them aware that this change is happening.
Yeah, you have to. Yeah, you have to sit down and just remind them that this is what's happening again, because it did happen at the end of last financial year, and just remind them that they may get less in the hand each pay run. If not, the business needs to consider that extra cash flow that they'll need for the upcoming financial year.
An interesting point you raise and the business and considerations. If I'm accruing super at 10% up to 30th of June, but I don't pay it before the 30th of June, have I got an extra 0.5% to consider for the pay post 30 June?
You do, yes. With payroll, it's on payment date, not when the payroll was actually earned. So if they've earned it up to 30 June, but it's paid, say 1st of July or 5th of July, it's at that new rate at 10.5%.
Wow. So we could have an ad hoc adjustment that we've got to put through on super just because of the timing.
Correct, yes.
The other thing that's important to note, if we don't pay it before the 30th of June or it's not cleared into super funds, we don't even get the tax deduction until the following year.
Yeah, correct. So our recommendation is try and process that payroll before 30 June and pay it and accrue that super at the 10% and then pay that super before 30 June.
So if you're not doing a pay run before the 30th of June and you want to accrue it, you could still do a super payment, if you like, if you wanted to for your staff, or is it really only got to do with wages paid?
No, you could accrue it and pay it before 30 June and get the tax benefit out of it.
That's great. And there was another important thing around super and the minimum threshold. What's happening there?
Yeah, there used to be a threshold of $450. That's what you had to earn in a month to be able to have to pay super for an employee. Now that's going to be waived. So an employee can just be earning wages and you have to pay super on that.
I mean, this is probably bringing into account your casuals and part-time people who are missing out on the whole superannuation system because they have multiple jobs.
Correct. Yeah.
Okay. Let me round back to this payroll consideration for a second and the fact that we're now on single touch payroll and effectively reporting to the ATO as we do payrolls or pay runs. Mm-hmm. In terms of planning, what do you see in that space? Is it a messy one?
You need to consider whether what you want to include in your pay runs and for STP reporting by 30 June. So this is probably where we'd bring the accountant in as well and just discuss maybe paying bonuses or extra commissions and include that in your pay run before 30 June.
Yeah, because importantly, when you press go for the payroll, you're really reporting it to the ATO on that time and they're going to be locking in annual payment summaries and so forth. So it's pretty important, yeah?
It is important, and we've still got to finalise payroll by the 30th or 31st of July 2022. So we need to confirm that. And we should be paying it before 30 June anyway as well.
So when you say finalise payroll, does that mean that's the due date for reporting our payroll for 30 June to the ATO?
So for the financial year, so it's sort of like the old payment summaries, how we had to get them to employees by mid-July. Now it's called finalisation, and you finalise through your STP by the 31st of July.
And that'd probably include all your payroll recs for the entire year, picking up any errors or adjustments that you made that you might have otherwise missed, and doing a full rec on the payroll.
Correct. And that's why it's on top of our checklist for end of financial year, because that's the first thing that needs to be done.
Great. So we've covered payroll and super, and they're probably pretty big items in our profit and loss. What would be the next in your order of things to tick off for the end of year planning?
Yeah, next in our order, we'd be getting the accounts prepared for the accountants to make good tax planning and business decisions for your clients. So we'd be doing the good old bank reconciliations and making sure bank balances match bank statements, lease payments, making sure that lease schedules, we have those available and that they're all into the accounts as well, including interest payments on those.
So it sounds like there's actually quite a few things to check off in the checklist, if you like, or when we're going through the accounts. Is that right?
There is. There's quite a big checklist that we do have available for businesses to double check at the end of financial year they've got everything covered.
So in terms of the end of financial year checklist for bookkeepers or the bookkeeping department, you've got a checklist that we could put down or supply to our client base to upload?
Yes, we do. Yeah, we're happy to share that with everyone.
Okay, so you've got your checklist, or if you didn't, you had clients without a checklist. No doubt they're making errors or there's things that they overlook. Give us some examples of the typical common or the more typical errors that you find when you're going through this process with your clients or your clients and their data entry.
Yeah, if the clients are doing their data entry themselves, there's quite often bank reconciliation differences that we need to fix up, unreconciled items that shouldn't be there, bills that have been said that have been paid that aren't paid. And if you're on a cash basis, that can really affect your profit and loss and what you're showing.
In terms of that and the effects of things like the GST, do you often find there's errors from prior periods that are overlooked and have never been cleaned up, if you like, in your reconciliations?
Yeah, definitely. Yep. And you can notice that in your opening balances of all the GST accounts and, your trade debtors and trade creditors. And that's why it's important to have a bookkeeper to pick up those errors and do that tidy up for you.
Or at least to use your checklist, which is there for you.
Or use the checklist.
Yeah, that's great. So the checklist is pretty much the guide. Use that guide. When you're not sure what to do or you don't have the inkling, time or resources, get a bookkeeper in to do it because, Hayley, in terms of what you do, it's bread and butter and you scream through it. Is that fair to say?
Definitely. Yeah, if you have a bookkeeping team, it'll definitely save you time and money. We can probably do it a lot more quicker and efficient than most clients. And especially at the end of financial year, you don't have time to spend on your bookkeeping. You want to put your energy into actually running your business.
So do what you do best and let others do what they do best.
Correct. Yeah. Let us do it.
And what would that normally be? Just a couple of hours of reviewing and cleaning up, you think?
Yeah, generally a small business would be, 2 hours, half a day, something like that, just going in and reviewing for you.
Yeah, and the fees on that would be negligible in the bigger scheme of things.
In the bigger scheme of things, yeah. If you take what it would cost for you, how much would you charge out for your own work rate and convert that, then you'd be able to see that it's probably saving you money.
I can tell you, though, that what I've seen with the accountants doing the work is if the accounts are in bad shape, the cost of fixing them up and cleaning it up from an accountant's perspective versus a bookkeeper is fundamentally more.
Yeah.
Well, not fundamentally, many times over more.
It is, yeah, and that's what I always say to my clients. You don't want to be paying an accountant, $500 an hour to clean up your accounts when you can do that for a lot less yourself or by just employing a bookkeeper.
Yeah, so it might be a little bit of short-term pain, but the long-term gain is quite immense.
Exactly, yes. So after a bookkeeper's gone through their checklist and tidied up the accounts and everything else, what would the accountants do or recommend?
So you're asking me the question?
I am asking you the question, Simon.
Okay, so with the accounts, and it's great you've asked that because accountants love having a clean set of books because it provides us a clear direction or message. So what we then do, if with a clean set of books, is start planning for that 30th of June. And from our point of view, the planning isn't like the bookkeeping planning, which is black and white. You've reconciled this or you haven't done it. The planning is what could it look like and what would you like it to look like. So generally our planning process, we sit down with the client or the business owner and we talk them through the process. and their desired outcomes. So with those desired outcomes, we start with the profit. So what does a profit look like, or could it look like at 30th of June? And how might we address that profit if it's too large or too small? And considerations around that would be what sort of superannuation payments we want to make for the directors and their direct associates or staff for the year. What sort of salary would they like to have reflected in their personal tax returns at the end of the financial year? And considerations around the salaries might be, am I going for a loan, or what's my spouse earned for the year versus what I've earned? Because what we're trying to do is look to marginalise the imposts of tax across a family group where we can, without of course prejudicing the client or falling foul of the tax man. There's also a number of other incentives or provisions to take in consideration, for example, capital expenditure and the ATO's allowance to write off the full cost of a capital item purchased in the business up to $150,000. So if a client's thinking of spending that money before the end of the financial year, they're actually going to get 100% benefit from that expenditure. From there, we'll be looking at things like directors or shareholders' loan accounts and making sure those loan accounts aren't what we call debit loan accounts, or the fact that the shareholder owns the business money, because that can cause what we call Division 7A and the punitive legislation around Division 7A and unpaid present entitlements. So they're really important to consider. The other things like trade debtors, people that owe us money. Have we got debtors in there which we're never going to collect? And in which case they should be written off, or provisions made before the end of financial year that could affect our tax result. The same also applies to creditors and people we owe money to. Are they all valid and current? And or have we got bills in there that we've received at or before the 30th of June and relating to the 30th of June that need to be captured in the accounts, thus reducing our profit? And as you've rightly mentioned, or we've discussed, Hayley, the matters to do with single touch payroll and bonus entitlements, and if we should be allowing for bonuses in what we're doing. The other more supplementary matters are to do with superannuation guarantee, and should we be maximising our super contributions for the year. And then from there, the standard things that we might do in terms of our paperwork. Make sure that we're potentially gathering all receipts, we're getting closing odometer records, we're doing all the things necessary to get us to the end of the financial year with as least pain and as much planning and total consideration from what the taxman might expect or be entitled to after we've finished the end of financial year. And overall, if it's done well, we should be able to pretty well dictate what the profit of the business would look like at the end of the financial year, what the impost of the tax would be on that profit, how much tax we've already paid, so we'll know how much cash flow we've got to set aside in order to pay taxes, PAYG withholding, GST. So we really provide a definitive picture for our business clients as to what it is that is crossing the 30 June finish line looks like.
That's great, Simon. So using our bookkeeping checklist, your accounting checklist, we've really got end of financial year covered for our clients. Absolutely.
And if we haven't, it would generally be a left field or something abnormal that would cause a problem, because generally we're pretty spot on with our planning in this regard, and it's really great, the outcomes that we can achieve for clients.
Yeah, great. Now, there are some specific different incentives this year that we can consider. What are those that have come out?
Look, the budget gives a bit of direction into that, and there wasn't a lot in the budget, to be frank. It provided a few short-term or one-off incentives and allowed a bit more for training of apprentices and older employees, but there was no showstoppers. The main one for me and the real one that had any meat was this 120% rebate for investing in digital technology, and that was digital technology hardwares and softwares, and also training of staff. So whilst it's not abundantly clear what levels this is going to go to. We know that there's going to be 120% rebate. That is 20% on top of the 100% you spend. And we know you're going to get that rebate in the 2022-23 tax year and not before. So you could spend the money from the budget night onwards, but you're not going to get the benefit of the 20% additional deduction until the next tax return or during that period when the government announces how it's all going to work.
Potentially we could get 100% this financial year, but we can't get the additional 20% next financial year. Is that what you're saying? Yeah,
it looks a bit like that. We haven't seen the legislation like everything in the budget. It seems to take a long while to come out as to the real nuts and bolts and the rules of engagement. I've had clients ask me questions. Does that mean I can go and buy a new printer, for example? Is that digital technology? So what is encompassed under that digital technology hardware and also training? And is there any rules or guidelines around the trainer and who they've got to be or how they've got to be registered in order to get the extra 20%? So it's a little unclear, but we know there's going to be an extra 20% there.
Great. And we'll just keep our clients updated, and then our bookkeepers can make sure that paperwork is readily available for the accountant to take that into. Simon, there was some legislation pre-budget about trust distributions. Hasn't really been discussed a lot. How is that going to affect everything for the financial year?
Yeah, that's a really interesting one. And it affects the 22-23 financial year. So importantly, the 30 June 22 year that we're about to finish is not affected by the legislation. However, the legislation is an instrument that's got allowances for the ATO if they feel that it's wrong for 22-23 to actually go back to prior years. So it's a bit of a double-edged sword. However, what we've seen from noise in the press and commentary relating to this, what they call 100A legislation, is unclear. So there's a fact sheet that the ATO's put out in terms of some guidance and some rules around it. So the most recent commentary around the ATO's interpretation is that it could be a bit hard, or it needs to be softened down. So we're holding fire on putting anything out to our clients until we've got some real definitives around the rules, but it is certainly going to be significant. And more specifically, it affects the beneficiaries and the entitlements of the beneficiaries. Not so much that you can't do it, it's how you have got to account for it and how the payments to these beneficiaries are managed or otherwise accrued within the accounts. So it's not changing the world, it's in terms of these beneficiaries not getting the money from trusts. So trust is still a good instrument. It's just going to affect how those beneficiary entitlements are managed.
Okay. And we'll, of course, let our clients know as soon as we have that sort of concrete information on that.
And I think we're waiting, unfortunately, for cases, and the ATO want a case, and so does the legislature. And the politicians have basically said, look, we think the ATO has gone a little bit far on their interpretation here. So it is one that we will commentate on, and we'll commentate at length and provide a good summary once we know what's going on.
Great.
So that was really good, Hayley, because that sort of provided a little bit around the planning from the accountant's point of view at the 30th of June. And incidentally, and you know this, what we then do is provide a action plan or outcomes plan, and we give it back to the bookkeeping or the business owner. And generally they've got a bookkeeper to actually implement. So then we give it back to you for your guidance and direction. And that works okay, doesn't it?
It does, yeah. That's how a good bookkeeping accounting relationship works. So we'll prepare, you make the decisions, and then you come back to us to implement it and get the best out of the business for them.
Yeah, that's great. Now let's talk about this good accounting bookkeeping relationship and move this into my next topic, which is the strategic planning. Now, strategic planning, from my point of view as an accountant, consultant, and it tends to be one that's just overlooked by a number of businesses. Have you got many businesses actually who do this strategic planning on an annualised basis?
I probably can count the number of businesses on one hand that actually do some good strategic planning, and those ones that do are my successful businesses.
So your businesses that are doing this strategic planning, what's it involve from your point of view, the bookkeepers? What are you seeing?
Well, I see that they have a good goal and a good vision of where they want to be, and we assist them with a good budget. So they have a good budget in place and sort of have an idea of where they're going to be financially in the next 12 months.
So you'll assist them with building that budget? Is that...
Yeah, correct. Yeah. So we can assist them in building the budget and some cash flows and to help them make good financial decisions.
Yeah, and from my point of view, when they're doing that budget, that generally falls back to that strategic plan. And that strategic plan is the blueprint, if you like. Think of it like sailing across the ocean. And without a plan, you could be sailing a long way in one direction and never really get to where you want to get to. So how are you finding these business owners that are really focused? What's it doing to their business from what you've seen?
Well, if they're focused and they have some goals, and it doesn't have to be a lengthy, good old-fashioned business plan. It can just be a 1 to 2 page sort of plan with a good vision and a good goals that they want to achieve within the 12 months. If they have those, I see them succeeding. So these businesses actually did quite well or survived quite well during COVID. And now they're on the up again at quite a rapid rate now we've got a bit of confidence back in the business world.
Yeah, that is so important when it comes to overall life and everything we do. It's all about planning. Planning to get where you want to get to. You want to win a 100-metre race, you've got to plan to go fast.
Exactly, yep.
So in our checklist, Hayley, we've highlighted a number of points and we've challenged our clients to address these 10 points, if you like, in terms of ask themselves the question around their business. And if it's not clear and succinct, to come to us, Hayley, and really have a good chat about what we can do to help them.
Correct, yeah. If you don't have a clear vision or unsure of what to do and how to do it, then our office, definitely between the bookkeepers and the accounting teams, we can definitely help your business set in the right direction. Also, if you're finding you just don't have time to do it, that's where a good bookkeeper or any contractor that you can come in and help you with your business, you should do it if you're finding struggling for time.
So we're going back to that stick to what you do best.
Correct,
Mythology. And I mean, importantly around that is the business owner generally is the one bringing in the income and wearing multiple hats. Let's get rid of those hats that you don't do well or you don't own, so to speak, and let someone else do that and get on with making money.
Correct. Yeah. Generally, if you're running a cafe or, you're an artist or something, that's what you're good at. You're not good. You don't have the numbers brain or you might be a good business person, but you don't need to spend the time on that. Spend the time on what you're good at and let us bookkeepers and accountants come in and help you.
Yeah. And that strategic planning, if you like, without worrying about doing the sales and chasing money is probably fundamental to what we're doing in our business approach.
Yeah. Correct. Yeah.
Thanks for joining us today for NavTalk. You can listen to other podcasts in the NavTalk series via YouTube or where you get your favourite podcasts, or simply search NavTalk. Be sure to follow Navwealth on LinkedIn, Instagram, Facebook or Twitter. And please, if there are any particular topics you would like us to cover for a future episode, let us know via our website. I'm Simon Prowse. Until we talk again.